Ladies and gentlemen, good day and welcome to the Man Industries India Limited Q3 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mahentesh from Man Industries. Thank you, and over to you, sir.
Good evening, everyone. This is Mahentesh, Manager Investor Relations from Man Industries. I welcome you all to the Q3 and 9 months FY22 earnings conference call of Man Industries India Limited. I have with me from the management Dr. Ramesh Mansukhani, Chairman, Mr. Nikhil Mansukhani, Managing Director, Mr. Ashok Gupta, Chief Financial Officer, and Mr. Jatin Shah, Company Secretary. We'll have a brief opening remark from the management followed by Q&A. Please note that this call may contain some forward-looking statements involving risks and uncertainties. Listeners are requested not to put any undue reliance on the facts presented during the call. With this, I hand over the call to Mr. Nikhil Mansukhani, Managing Director, for his opening remarks.
Good afternoon, everyone. Coming to the financial performance for the quarter and 9 months of the financial year. During the year Q3 FY22, we reported a total income of 634 crores, a growth of 15.7% compared to 1548 crores Q3 FY21. The growth in the revenue was on account to timely execution of projects. Our EBITDA for the quarter stood at 63 crores compared to 61 crores in Q3 FY21, with an EBITDA margin of 10%. The EBITDA for the quarter grew about 2.6% on year-on-year basis. The profit after tax for the quarter stood at 31 crores, registering a growth of 2.5% compared to 30 crores in Q3 FY21. On the financial highlights for the 9 months ended 31st December 2021, we registered a total income for 9 months FY22 stood at 1546 crores as compared to 1554 crores. The EBITDA stood at 161 crores with a margin of 10.4%. Our profit after tax for 9 months FY22 stood at 75 crores. In the current financial year, the government discontinued the export incentive scheme. Despite that, we were able to maintain our profitability. Sharing with you some of the highlights of the order book. During the Q3 FY22, we have received multiple new orders from the oil, gas and water sector, aggregating to approximately 900 crores. Taking into consideration these new and pending orders, as on date, our total unexecuted order book stands at 1100 crores, which should be executed in the next 5 to 6 months. We continue to witness strong traction, which is reflected in a strong bid book of approximately 20,000 crores. These bids are at various stages, and we expect to bag a sizable order over the next few months. Little bit update on the CAPEX is I'm delighted that all the work for the induction bending process is almost complete, and it should be operational in the first quarter of the next financial year. Under this project, we'll be able to make steel bends in-house, which would help us in a margin improvement. We have also forecast around 5,500 to 600 bends at a full capacity. The total amount spent is approximately 50 crores for this project. On the ERW steel pipe project, I'm happy to share that the work is in full swing, and the project is likely to complete by the second quarter of financial year 22-23. We expect that our enhanced manufacturing capabilities and excellent execution capabilities will enable us to scale our businesses. Overall, we remain committed to set our agenda of delivering consistent and profitable growth. This is all from our side. We can now open the call for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Ayush Jalan, individual investor. Please go ahead.
Hi, good afternoon. Thank you for giving me the opportunity. Am I audible?
Yes,
Yes,
sir.
sir.
Yes, thank you. You all had given in the last con call a revenue target for FY22 at 2,300 crores. Is that still valid?
Currently, we already crossed 1,600 crore in 9 months. We are expecting this quarter will be better than last quarter. So our estimation of 2,300 crore expected to achieve it.
Okay. And just another question on what was discussed in the last con call. There was some order for around 100 crores for some special steel that was supposed to be imported from Germany. Has that been executed?
Yes, sir. Already we got it, executed it, and material.
Okay.
Yeah.
All right. Thank you so much. That's all from me.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Manjeet Buaria from Solidarity Investment Managers. Please go ahead.
Yeah, hi, this is Manish Gupta from Solidarity. I had 2 questions. The first one is, any update by when we should be able to complete the real estate sale, and what are we planning to do with those proceeds?
Okay, Mr. Gupta. Good afternoon.
Good afternoon.
Yeah. Regarding you are talking, I think you are talking about the Merino, because that is a legal. This is the only company in the company the subsidies regarding that. We are having the very advanced discussion with our development partner, and we hope should be something come out before 31st March. And the more detail, then I will be able to give you the beginning of the April 2022-23.
So based on your best understanding as of now, when do you expect cash from this?
The dead dialogue is going on with the developer, and this is not a giant development. This is a development model DM. This is a DM. We already signed with the company because in between there was some issues were there. Now this slowly all are resolving, and the cash visibility of the cash receipt we will be able to say you in next 2 months when the things are totally logged and in all the manners.
Okay. So my second question is that can you talk a little bit about the demand environment vis-a-vis say at this 2 or 3 years ago for our business? Do you see the demand environment picking up over the next say rolling 3 years vis-a-vis what it was pre-COVID?
Yes, sir. I can reply the 2-3 important issues related to the demand. In regard to hydrocarbon sector, the demand in India, the networking of the pipelines is increased from almost double in last 3 years in the government proposals. But now the networking is likely to complete it next 5 to 7 years is 15,000 kilometers, which is double than originally expected. In Corona 2 years, also in India, almost we were doing well. There is not a project on any hold, and it will continue. Right now, if you see our bid is around 20,000 crore, which I think this is the highest in our history. Every time we 10,000 to 12,000 crore bid, so this is 20,000. So our share should be likely to be increased in coming years. As regard to export, export is little bit slow last 2 years. Although last we had done the wonderful 1,600 crore export, around 75% export. But this year will be around 75% local and around 25% export. This scenario is changed because the less pipeline worldwide because of the oil prices was in the trouble last 2 years in the international market. But now the oil prices is firmed up last 2-3 months. As you are aware, it is roaming between 17 to 90 US dollar. The impact always once the oil prices gone up, then international player, particularly international player, they come after few months once there is a more budget to spend it. So hopefully in coming time, India will grow definitely. There is no doubt. There is a visibility of the lot of pipelines and we are getting the good business. This year also we are doing 1,600 crore domestic market rather than export. The export will be little slow. I gave the reason to you also. As well as one more issue which I want to indicate here, the MEI scheme is discontinued from last year. So now the export incentive, there is no export incentive. We are very close discussion with the government to restart. So they have started road tax. The road tax rates still not declared by the government for the pipe industry and steel industries. The new policy is under frame and it is likely to be 1st March. So we hope the road tax will help the further booster of the pipe export. So all the pipe manufacturers met government and they are trying to convince government to give the booster. So overall the position is more bright, you can say, compared to last 2 years, and hopefully pipe industry should do well.
But so my final question is that do you see or what initiatives is the company taking in order to reduce the working capital cycle?
Working cycle, the most important now, last 1 year, the commodity market was abnormal high. You are aware. That time cycle time increased last 1.5 years to have the more inventory control, time bound program, etc. But in few months now the steel prices little bit gone down and we are able to do now the slowly inventory control. And we are hopefully the working capital costs, whatever we are showing 10 crore rupees per quarter roughly. This is not only cost of inventory. Actually, lot of bank guarantees, performance bond, EMD, which is a normal business. And the 2 crore capital finance cost increase this quarter. Also, one of the reason we bid around 20,000 crore, which the result will come in near future, as well as our turnover also increase a little bit, impact is there. So overall, I think so that will not go up. We are trying to reduce it by adopting the better collection, better dispatches, inventory control, etc.
Okay, thank you.
Thank you. Thank you, Mr. Gupta.
Thank you. The next question is from the line of Rahul V from RV Capital. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. So, sir, I had a couple of questions. Am I audible?
Yes, please go ahead.
Yeah, hi. So, firstly, on your products that we have, which is, on ELSA and ELSA, would you be kind enough to share the revenue breakup for these two segments?
Although I do not have the right figure, but mostly the ELSA is having this year is much more, Last year was mostly the spiral was there. This year ELSA is more.
Okay. So, I mean, would you have any ballpark figure that you could share? Something like, is it more like 70-30 in that ratio?
You can say 70-30, but scenario change any time because some orders we are working nowadays for coming quarters, which is mostly the spiral pipe business also coming. So this percentage always changes.
Okay. And of this, what is the export and what is the domestic breakup? So you mentioned 75-25 would be, I think, going ahead, right? Is that what was the current quarter also?
Yes, sir. Last year was 75% export, 25% domestic, roughly. This year just is a flip it. And the next year projections, we are hoping some export improvement, but domestic will be definitely projections and visibility is there.
All right, great. And so my next question was on the industries that we cater to. And, pardon my ignorance here because I'm looking at your company for a bit of a first time. So I just gone to a few of your Concalls earlier. But, so just on the industries that we service, where we have, oil and gas and water segment, what would be the breakup here? If you have any numbers you could share there.
Right now, our 80% revenue is from oil and gas.
All right. Okay. And this is expected to continue only, remain at this level?
Yeah, no, now the oil and gas we are doing 80%, but we capacity in the water segment we have some capacity, and the government scheme Nal Se Jal, they have given the more allocation for 2022-23 budget.
Right.
50,000 crore was the original budget, now 60,000 crore. So that is likely to increase every year because the government thrust to provide the water to all the needy societies. So in future, that segment will capacity utilization will be much higher compared to other segment.
Right. Okay. All right. And so just one last question, if I may, I'll get back into the queue. I just wanted to get your thoughts. I mean, you did mention a bit on the last caller, outlook on demand. But I just wanted to understand more on, how are we seeing the overall tendering look like, especially with, the significant increase that we've seen in oil prices. So what is your outlook on the tendering and, how much, could you share any color on what we are currently bid for and, in general, what is in our bid pipeline?
The domestic market is usual, there will be always growth because the international price of the oil is not going to impact in India except dollar and foreign exchange reserves, etc. Because the growth will continue irrespective of whatever the oil prices is there in our country. As regard to export, definitely helping the oil prices, if the oil prices ranging between $70-80, then definitely there will be more growth, more spending by the international player who those want to complete the pipeline. So in near future, we are expecting the demand will be revived in international market since the oil prices is hovering between $70 to $90 last 2 months. So we are seeing the more capex in coming months. So oil prices, if they continue, even their budget is around $70, even there is a growth prospect is good.
Okay. And would you have any numbers on tendering activity? Anything, you have any bid pipeline or any amount of bids that we've submitted or, anything on that?
You are talking the name of the project? What you are talking?
Just in the overall amount, just in general, what how many orders have we bid for, in the pipeline?
Very difficult to say. As we already 20,000 crore bid, we participated, and we are likely to get the good chunk to continue to achieve our growth prospects.
Okay. Sure. Fair enough. So I have a couple more questions. I'll come back in the queue. Thanks so much. Thank you.
Thank you. The next question is from the line of Akhil Ansari from Robo Capital. Please go ahead.
Hello, good afternoon. Am I audible?
Good afternoon, sir. You are audible. Please go ahead.
Yes, thank you. So I just had a question on the ERW pipe project. So what is the ROCE on that project?
Just I am handing over to my CFO and our MD, which will reply.
So basically the ROC should be around 15 to 16%.
Okay. Okay, fine. And the debt that for this project, has that been recorded in the books currently?
No, not. We have opened the credit, but no disbursement has taken place. WIP.
So when would it, be when would it be recorded in the books?
Maybe some of the amount in the current quarter and some of the amount in next quarter.
Oh, okay, fine, great. And my last question is regarding the revenue guidance and the margin guidance. So you've mentioned in the next 3 to 4 years it'll be around 3,000 to 4,000 crores, and margin guidance will be around 11 to 15%. And so for FY23, what would be the revenue and the margin guidance?
Right now we cannot give the guidance. We are working on that because the particular reason the SAW pipe business is continuing with the growth. ERW also we will add some turnover in the second half of the 2023, and we are hoping to more utilization in coming quarters of both the units.
And what is the current utilization?
The current utilization LSW is almost 80-90%. Spiral around 40-50%. So we are seeing the more utilization of the lines in coming business scenario.
Okay, great. Okay, thank you so much. That's from my.
Thank you. The next question is from the line of Ayush Agarwal from Mittal Investments. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Am I audible?
Yes, sir.
Yeah. Sir, my first question is regarding the ERW capex. On this 170 crore investment, what is the kind of asset turns and margins are we expecting?
At the time of the full operation, once it is come to full operation, we wish to add, I'm telling you, we wish to add around 1,000 crore additional turnover at the time of the full capacity utilization. Full capacity means 70-80% utilization, which is a good capacity utilization as the product mix basis in our business. So 1,000 crore additional top line is expected, not this year, maybe 23-24 more, because a lot of city gas distribution project are lot projects are coming, and the capacity is very low in India as regard to this kind of API grade pipe of ERW. So we hope to achieve this target next year fully, partly this year.
And what is the kind of margins we can do on this project?
We are calculating this moment around 14-15% EBITDA compared to 10-12% SAW. So there will be little bit much better EBITDA we are expecting over there.
So then in this case, the ROC should be much higher, right? I mean, if we can do 1,000 crore, which is around 5-6x asset turns on the 170 crore investment, and if we can do 14%, 15% margin, then the ROC number should be much higher, right?
It should be in future. Whatever I said you, I told you for the current year. Current year means 22-23, where with the utilization not fully, maybe partly. But in coming time, next year, will be much higher. Average out. We have to average out. And companies having some other plants also, some value-added products, we are going to start very soon in few months, in 1 quarter and some other things, which is going to improve the profitability of the company for our shareholders.
Right. Thanks for that. And so my second question is on the steel bend CapEx that we have done and will start in Q1, what is the incremental revenue we can do from that 50 crore investment?
Actually, this is a business not for top line business. This is a bottom line business actually.
Okay.
The bending margin profit is very high. That's why that does not go in the much volume, but much more profitability, which impact the bottom line much more rather than top line. And ERW is going to impact bottom line as well as to top line, both in plus side.
Right. So if you can just explain, what a steel bending is and how does it add to a profitability, then it will be really helpful.
So basically, a lot of orders we used to get before, and in which we had to get the bends done from different agency outside for the transportation cost as well as the bending cost, and then retransport coating. So we were losing out on those margins. By putting the bending plant now, the EBITDA margins bending would be plus of 20 to 25%. Because we save a lot of transportation cost of sending the product, getting it back, coating it, and then reshipping it to or sending it to our customer. So, so that is principally the bottom line business is much better for this, and we have a value addition like how we do for coating for all our pipes. So that is why we've gone ahead and done this right now.
So what percentage of our products would we be getting bended outside our company?
Yes, very few. Very few examples because we do not have the facility. We have to import, take the product, etc. Now this in-house. That's why our lot of clients, those who are aware that we do not have the facility, they used to buy from outside. But now our revenue will much increase. Bottom line, they will buy from us because if the pipe and bends from same supplier, so everybody they want to they like to go this combination.
Right. Okay. Right. That's really helpful. So my next question is a bookkeeping question. What would be our cash position as of this quarter, as of December?
For our CFO Ashok Gupta will give the rough estimation regard to this. Hello.
Yeah.
As on end of the December quarter, our liquidity position is really good. We had this working capital limits of about 125 crore that was unutilized, and moreover we were having cash surplus of around 40-50 crores. And moreover, this we doesn't have any kind of term loan in our books.
Right. Sir, when we look at our this FY21 balance sheet, then we had a lot of cash. Even H1 balance sheet, we used to have a lot of cash on our books. So where is that cash getting utilized? If you can help us.
See, whatever cash is being collected from receivables, that is being utilized for payment of our liabilities, all our trade liabilities. Sometimes we get the payment from our receivables much before our liabilities getting due. So when our liabilities getting due, the funds are being utilized for payment of those liabilities.
Okay, so right now our cash position is only 40-50 crores, right?
Over and above we have unutilized cash credit limits.
Correct.
And
yeah.
end of the year also, we have sufficient cash surplus.
Okay. And then the last call, I think I remember you had mentioned that we are trying to lower our interest cost with the bank. So has that exercise been successful, or where is that right now?
That is a continuous process. We are all our banks for reduction in and concession in our NFB charges, as well as reduction in our cash credit facilities and this foreign currency loans. So that is an ongoing regular ongoing process. Every now and then we are chasing our bankers for certain kind of waivers and concessions.
Right. And so my final question is on input cost. How are we, faring on that, and like what are we doing to control that better? And are we facing any challenges? And if we are, then what are we doing about them?
You are talking about the input cost. Yes, there was a challenging time last year where the commodity prices gone up, and fortunately we managed very well, and the commodity cost impact is very minimal. Now, because our contract is a long-term contract, both the sides, the commodity side, buying side also, and selling side. But now the market is matured, and we are able to pass through whatever the increase of the commodities the market is accepted. So in near future, we don't think so any hit about the commodity impact anything to our company, because we book back-to-back raw material 90 to 95%. We do not take the speculative risk.
That's really good to know, and good luck on the rest of the year and on your CapEx.
Thank you, sir.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Ranay Zaveri from J&J Holdings. Please go ahead.
Hi, sir. Good evening. Thank you for this opportunity. Sir, I have two questions. One is, if I see gross margin will expanded this quarter sequentially as well as year on year, if you can just throw some light on that.
Ladies and gentlemen, the line for the management is disconnected. Request you all to please stay online while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you.
Hello.
Mr. Zaveri, please repeat your question.
Sir, my question is basically if I see our gross margin which has expanded in this quarter vis-a-vis sequentially year on year, if you can just throw some light. I can take this question offline later on if you say so, sir.
See, whatever new orders we are targeting new orders with the better margins and better input, this input cost controls. We book back-to-back steel for all our projects so as to. As such, we are targeting our increase in our bottom line as well as gross margins.
Okay. Okay. And sir, my next question is basically if I see the other expense line item, this has substantially gone up. If you can just throw some light on that.
During the quarter, we got some order for job work. So in top line, we have added the income of job income as well as we have expensed out the job charges under other selling expenses. That single head is having around 48-49 crores single item under other expenses.
So, I'm asking specifically, was there any write-off in this quarter?
Not at all.
Sorry?
No write-offs.
Okay. And in 9 months, what is our write-off?
9 months also there is hardly some 6-7 crores of write-offs we have taken during first 9 months of the year.
So if I recollect right, in Q2 or Q1 there was a large chunk which was written off.
That was last year.
Okay. In this 9 months, it's only 6-7 crores that's written off, right?
So FY 2021, we had around 80 crores of write-offs.
Okay. So in terms of write-off, there is nothing that is pending as such, or which we foresee that we need to take probably going forward?
Whatever amount not likely to be received, that has already been taken in last year's audited financials. And as such, after review of all our receivables, we understand all the receivables are good to receive.
Ongoing company.
Okay, fine. And so last question from my side. Hello.
Yes.
Sorry. This Marino, is there some cash that we can expect? So basically, or this being a JD, we'll have no front end of cash, and then it could be at a later stage. If you can just share that. Thank you so much.
We are in discussion for both the things. Probably interchange certain amount of cash for some equity, and then they develop it, and also a format in which we will take a full exit. So we are discussing for both the options, and looking at the market scenario, we are positive that somewhere we'll get certain amount of cash chunk into the company. That's our outlook as well.
Thank you so much, sir.
Thank you. The next question is from the line of Dharma Venkatesan, individual investor. Please go ahead.
Good afternoon, sir. Hope you are doing well and good.
Good afternoon.
Sir, my first question is that, what is the capex cost incurred for our upcoming capex steels? Actually, we have 170 crores as our plan for ERW steel pipes. How much has been incurred and how much is yet to be incurred?
Yeah, our total capex plan is including including ERW is around 250 crores. And out of that, as of now, we have incurred about around 35-40 crores LC. And over and above that, we have opened some LCs for procurement of our equipments.
More than 100 crores.
That is more than 100 crores.
Sir, if I heard it correctly, our capex for ERW is around 250 crores?
No, 250 crores is the total cost of project. Out of that, Mr. Gupta wants to convey more than 100 crore LC is already open for equipment. The equipment are being shipped, and some shipped, some received, and the 40-50 crore for the construction, etc., etc. So you can say side 150 crore by this year will be WIP roughly, and then the balance will be in few months to complete.
Okay, sir. Because if I see our corporate investor presentation, the capex was mentioned as 170 crores. So that's why I am getting confused.
That is a ERW 170 crore, upgradation of the plant, and bending. There are 2-3 small things collectively, all including around 250 crore.
Oh, okay, sir. Now it's clear. Okay. So our ERW is 170, our bending and value-added products is around 50 crores, and others comes under maintenance capex. Correct. Okay.
Madam.
Hello.
Yes.
Yes, sir. So basically, 170 crores is for ERW steel pipes and 50 crores for our value-added products and bends, and remaining is our maintenance capex for this for the next financial year. Correct, sir?
Yes.
Okay, sir. And my second question is that what is the payback period for our value-added products, the 50 crores? What is the expected payback period for the steel bends and value-added products?
Payback period for the value-added product would be around 4 to 5 years.
4 to 5 years. Okay, sir. And next question is what is our current interest cost for our working capital limits, which we are getting it from the bank? What is the current cost of it?
Finance cost, as we have declared for current quarter, is about 11 crores, and for 9 months is around 27.5 crores.
No, sir. Like in terms of percentage, is it possible? Interest cost percentage, like how much interest percent we are paying?
Percentage as such, it is spread from 9% to 11%.
Okay, sir. Okay. And is there any plan from the management to bring the pledge even more from the current 14%?
Pledge even more.
No, not at all.
So we expect this.
Rather, we are trying to get all the shares depledged.
So, like we can expect depledging in the coming quarters, the numbers to decrease, correct? Hello.
Yeah, should be.
Oh, okay, sir, fine. And what is our bid success rate usually? Because right now we have around 20,000 crore as bid book. So what is our general success ratio historically?
Safer side, you can take it about 18 to 20%.
18 to 20%. Okay, sir. And my final question is regarding the real estate part. So, what is the plan of the company on the management if and when the cash is received from the land? Like, is it going to be used in capex or is it going to be used in some other areas? So what is the exact plan?
Whatever funds are going to be generated from this monetization of our real estate, that is used for the business of the company. That maybe partly for capex, partly for to support our working capital side requirement.
Okay, sir. Thank you, sir. Okay, sir. Thank you very much, and thank you for the opportunity, sir. I'm looking forward to better quarters in the coming years.
Very much.
Thank you. The next question is from the line of Navid Virani from Bastion Capital. Please go ahead.
Hello. Hello, am I audible?
Yeah.
Yeah. Good afternoon. Thank you for the opportunity. So first one was that we had this significant line item called purchase of stock in trade, which is not visible since last 2 quarters. So just wanted to understand, so first one, what was this line item pertaining to before? And also, have we made some accounting change with respect to this line item now?
In fact, this purchase of trade is basically stock trading, trading turnover and trading purchases. We got some order overseas for supply of some of the items which we have procured and this sold to overseas buyer.
Opportunity based.
It was
Opportunity based.
It was one of the orders we are getting in I can say especially we got this order for supply of raw material. So we procure the raw material and supply as it is. So that's the reason that item is coming reflected under stock purchase of stock under trade.
Okay. So this we can't expect to recur unless we get this special order again.
Not that kind of big transaction.
Okay, so this is not a recurring line item. Is that the right?
Not a recurring item.
Okay. Sir, next one was on the other expense line item, which you just mentioned that we did some job work and the expenses we took out as other expense. So can you throw some more light as to what kind of job work is this here?
We got some order for coating of the pipes, where the pipes got supplied by as a free supply to us, and we done the job work of coating.
Okay. So this is coating. Okay. And lastly, just want to understand that our outstanding order book at this point stands at 1100 odd crores. So wanted to understand if we have some sort of an internal target in terms of order book to revenue or some other metric which we are trying to achieve or maintain going forward.
See, generally we have the visibility of the orders for our next 6 to 9 months production planning because of the fluctuating steel prices. So this 1100 crore turnover is, order book is sufficient to run our plant for next 5 to 6 months. And more, we have outstanding order this bid position of more than 20,000 crores, where we are expecting our good chunk of orders for the to be executed next financial year.
Okay, so that's it from my side. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Anirudh Shetty from Solidarity Investment Managers. Please go ahead.
Yeah. Hi, thanks for taking my question. I had 2 questions in mind. So you had mentioned that the ERW plant has a higher margin of, around 14-15%, maybe 10-12 for us, existing business. So from a layman's perspective, just wanted to understand what is it about ERW, pipes that, make it, more higher margin business?
The reason is because it's a smaller diameter, and with the high capacity plant, we can manufacture almost 600 to 800 and sometimes even to a size of 800 to 1000 pipes a day. Whereas in a spiral or a longitudinal, we can manufacture, depends on the number of, we have to add a lot of capex for adding more lines and to add the production. But even on a peak load, on a good size, we can't produce more than 200 pipes a day. So, and also all the OPEX cost of the ERW is comparatively lesser. With the electricity cost and everything is cheaper. So that's why the margins are a little bit higher.
Got it. But if I had to compare them on a gross profit margin level, would it be very different, ERW versus ELSA and spiral?
Sorry, on the gross margin level?
Yeah.
The gross margin level, yes, there will be a difference. And also, one more additional point is that because there is so much work in the market, that's why also we are getting a lot of margin, a little bit that additional margin for the next at least 8-10 years, because due to CDG gas distribution. That's why also there is an additional benefit to that as on today.
How do you guys think about long-term sustainable margins for the ERW? Because, as you mentioned, there are structural reasons why margin is better, but there's also the demand-supply, angle today, right? Where there's so much demand and maybe supply isn't catching up at this point in time. But over a long period of time, do you think this 14-15% margin would be sustainable?
No, I don't think on a long term 14-15% would be sustainable. I think it would brush out some of its charm. But depends on the expansion thought process of the country. Currently, the next 10 years looks very bright, so we do not see an issue. But yes, any supply-demand economics plays in this. So when obviously when the demand goes down and the supply goes up, the margins always take a bit of a hit.
But does it, on a long-term basis, continue to remain like a 15% return on equity business, or do you see that commodifying to, a more like 11-12%? How do you look at that?
We did the project analysis. We have kept 14-15% in mind on a long-term analysis. And looking at the 10-year span of only metros and everything, we think there is a great demand. And definitely 10 years down the line, the way the country is going, down the line, the C grade and the B grade cities will also go to a higher level. So we don't see as such any decrease in demand right now. And so the margin should continue for us.
Okay. My next question is on the extra business. We are at 50% utilization today. Where does this normally settle at, from a peak utilization perspective?
Sorry, I didn't get your question. There's too much of...
Sorry. My question was the extra business. It's at 40-50% utilization today. What is peak utilization for this product?
The peak utilization depends on the thickness and size of the business. But on a safer side, if everything goes well, we can go up to 70 to 80% peak load product mix design.
Got it. Okay. Thanks for that. That's it from my end. Thank you.
Thank you. The next question is from the line of Rishikesh Oja from Robo Capital. Please go ahead.
Hi, sir. Just one question from my side. What is the status currently on Man Infra demerger? And if you could you give any broad timeline for it?
So Man Infra, the demerger process related to Man Industries has already been completed from our end. The matter is also submitted in court, and we are waiting for the other side to do the needful for the allotments and the further process. And unfortunately, the rest of the matter is subjudice in High Court. But related to Man Industries, all the documentation and submission of documents, everything is being submitted.
Okay. And also, one more question that I had. Are we currently facing any shortage of coal supply?
Coal? No, we do not use
We do not use coal directly.
Okay. Okay, got it. No problem. Thank you.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you everyone for your participation in Q3 and 9-month FY22 earning call. In case any further queries, feel free to get in touch with us or Pareto Capital. Thank you.
Thank you. Ladies and gentlemen, on behalf of Man Industries India Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.